Hello traders! In this video, we will have a look at different ways of how you can display data on your chart. The ways of displaying data on your price chart are pretty much endless. This is why you will hardly find two traders that do and watch exactly the same things in their trading. Although most traders are using candlestick charts, which we covered in the previous video, there is more depth in those as well. Besides candlestick charts, we also have a look at different graphical representation of price charts, such as bar charts, Renko, or Heikin Ashi charts. Candlestick charts. We have covered Japanese candlesticks in previous video, so we will just do a quick recap now. There are two most popular methods of charting and viewing technical analysis. The anatomy of candlestick consists of the body and the wick. If candle close above the open, we have a bullish candlestick. If the candle closes below the open, we are looking at a bearish candlestick. Wicks represent the highest and the lowest points where the market traded. As you can see on the screen, we have two candlestick charts next to each other in our FTMO CTrader platform. Although they look the same, there is one significant difference between them. The chart on the left is based on the time and the chart on the right is not. The chart periodicity is the main function you can control while setting up your candlestick chart. The time periodicity is the most popular and common against the traders. Most trading platforms will allow you to set up charts based on minutes, hours, days, weeks, but also seconds. The most popular charts used by traders are 1 minute, 5 minute, 15, 30, 60, 4 hours, daily, weekly, and monthly charts. Although you can set up your chart with any setting you want, using those popular time frames works simply because a lot of traders are watching them as well. If you use something like a 40-minute or 3-hour chart, the candlestick pattern on your chart might have a lower weight as no other traders see them. The non-time based charts are less common, but they still can give traders valuable information. Our traders can use stick and range charts in our FTMO CTrader platform. These two are also the most popular non-time based charts. In the tick chart, one tick represents one transaction. In other words, one tick is made when the market fluctuates by the minimal price increment. If we take a look at EUR/USD, which is quoted on 5 decimal places, one tick would equal to 0.401 or 1 pipette. In range bar, every bar will end once the range between its high and low equals the chosen range. This means that every bar will have the same bar range and will close either at its high or low. Using a range or tick charts can eliminate noise and display trends in a much cleaner picture, as you will get rid of the time periods when markets are not moving and staying range bound. This can be clearly seen when we compare this DAX 4-hour chart with the 100 range chart in CTrader. You can notice that both uptrend and downtrend were much cleaner on the range chart once you eliminate the time factor and put your focus on price rotations. Bar charts. Only difference between candlestick and bar chart is the visual representation. Bar charts, often called OHLC charts, are represented as vertical bars with two notches that represent open and close of the bar. Compared to Japanese candlesticks, bar charts might be a little less clean for new traders when it comes to candlestick patterns. On the other hand, they might present a little cleaner picture when it comes to marking out support and resistance. Renko. Renko is similar to range and tick charts. It eliminates the time factor from trading and changes the visuals of your chart completely. You won't see candlesticks anymore, but you will be looking at bricks instead. Name Renko came from Japanese renga, which stands for brick. The Renko chart prints a new brick when market moves more than the brick size away from the previous brick. Let's say we define that one brick signifies a movement of 5 pips. So, until the market moves these 5 pips in one direction from the close of the last brick, no more bricks will be drawn. Renko charts are not only great for filtering out of noise, but also for making out support and resistance areas. Heikin Ashi. Heikin Ashi is another chart representation which comes from Japan. It means average bar. And although this is not something you need to know, here you can have a look at how the Heikin Ashi candle is calculated. The Heikin Ashi is constructed the same way as candlestick chart but has a different calculation method. You can set up a Heikin Ashi chart as you want on specified time, range, or tick. Heikin Ashi filters out the movements and makes a much easier approach to trend following. Downside of them is that you might miss some valuable information as they might smooth out the chart a little too much. But they are a great tool for both entries and trade management. To conclude this chapter, the best thing you can do is to play with different charts and settings and find what suits you best. That is always the smart approach. Regular time-based candlestick charts will always be the most popular as they are used by traders worldwide. But tick charts, range charts, Renko, or Heikin Ashi can be utilized in your strategy and bring a lot of use for your personal trading. And tell us, what do you prefer in your trading? Let us know in the comments below. Alright traders, this is it for the video. I hope you have enjoyed this video, and if you are interested in something or you are struggling in something, just let your comment down below. Please don't forget to subscribe our YouTube channel, and I wish you steady study and see you next time.